Today, we're diving into the latest updates about SoFi, a stock that continues to be on a roller coaster ride. It feels like every day brings a new twist, and today is no exception.
Hello, everyone.
Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. At the time of making this video, SoFi's stock is down by 2.44%. A new 52-week low of $6.15 was reached today. If you caught the bottom, give yourself a pat on the back. With 13.8 million shares traded today compared to the average of 29.3 million, it's a heavy volume day. Early trading saw significant buying, with transactions over $100,000, including a notable $2.15 million purchase around the $6.34 mark. However, the buying spree was followed by some selling due to two recent events, which we'll discuss shortly. Firstly, Galileo Financial Technologies, a part of SoFi, announced new wire transfer capabilities. This is a reminder that SoFi is more than just a bank. It has a robust fintech component that many overlook. Despite this news, there were no recent SEC filings since July 5th, which means nothing substantial has come out to justify the stock's movement. Now, let's get into the real reason for today's decline. Two new analyst ratings were released. This is somewhat unusual, as ratings typically come out after earnings reports. KBW's Tim, with a 70% success rating, downgraded SoFi from $7.50 to $7, and Barclays Terry, with a 55% success rating, lowered it from $10 to $8. The consensus rating is $8.15, indicating a potential upside of 31.45%. These less than optimistic ratings have certainly impacted the stock. Investors' frustration is understandable. Despite positive ratings, SoFi's stock price barely budges, while it reacts sharply to downgrades. This stock's persistent decline is concerning, especially as other stocks surge. As mentioned in previous videos, many investors are grappling with the opportunity cost of holding SoFi. The stock's inability to sustain gains is demoralizing, and market manipulation exacerbates the situation. On the short interest front, shorts have returned 212,000 shares, with 18.01% of the free float shorted, amounting to 187.01 million shares. Utilization stands at 68.15, with a short score of 74.46 and an average cost to borrow of 0.88%. Shorts returning shares on a down day suggests today's decline might be unjustified. Analyzing this data helps us understand the broader market sentiment and potential future movements. Looking at options, with the market open for an hour, 1.89 million calls and 714,000 puts have been traded. About 46% of SoFi's options are bearish, indicating a general expectation of further decline. The open interest for the upcoming Friday's expiry shows 20,000 at the $6.50 strike and 23,000 at $7. With a significant buildup of resistance points, making it harder for SoFi to climb. This concerning trend has been ongoing for 3 months. It's uncertain if SoFi will experience a FOMO-driven surge like in the past. This might be an inverse scenario where the stock continues to drop until earnings, which could potentially trigger a rebound. The market is unpredictable, and I've placed a bid for 200 additional shares at $6.16, anticipating it might hit this level. Technically, SoFi is trading between support at $5.99 and resistance at $6.28. The stock seems to be in freefall, and market makers might increase resistance around the $6 mark, making it a tough battle. Stochastic indicators show SoFi as oversold at 21, with a bearish deviation. Despite the bullish sentiment on social media, retail investors are selling out. Interestingly, many social media posts claim people are buying the dip, but data suggests otherwise. This disconnect is problematic. Retail-heavy stocks experience volatile swings due to panic selling and hesitation. Many investors who promised to buy at $6 are now waiting for $5. This hesitation is a common issue, as people fail to act on their own plans. As someone who swing trades, I sold my large position at $8, bought back in the high $6s, exited at $7.50, and recently re-entered at $6.30. It's crucial not to fall in love with a stock. If you set a target price, stick to it. My Tuesday morning rant aside, give yourself a shout out if you made a move today. I just added another 200 shares of SoFi at $6.16. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.